our depreciation, I got this depreciation. Our depreciation is going to be 187, a balancing figure, 187,180. 187,180. This is the balancing figure, or this is the amount that I get after adding everything and subtracting my total operating expenses, because it is already given. So after that, I must go back again and say gross profit, gross operating profit minus operating expenses in order for me to get operating profit. So my operating profit, it's 935,800. 935,800. We can confirm it with you. Remember, we said 42,084,220 minus 3,348,420. Then we'll be having 935,800. That's my answer, and this is basically what is here. You subtract the two, this two. You subtract your profit. I wanted a different color. You subtract your profit with your operating expenses, the two, then you'll get this one. After that, we're coming down. We're having interest, of which I did it in rush. This interest goes as follows. Our interest, this interest comes from the nominal account section. Here is the interest, 27,000. That 27,000 is here. Then what do you do with this 27,000? You must add it onto the operating profit. So our operating profit is 935,800. Then you must add the 27,000. Then we'll be having 935,800 plus 27,000. Then we are going to have 962,800. 962,800. Then you must subtract your interest expenses. Your interest expenses is how much? It's 122,000 minus 122,800. Then you have 840,000. 840,000. This 840,000, we must use it to get our income tax for the year, which must be here. Income tax for the year. Income tax for the year. It says here it's in a taking care of all adjustment into account, the correct net profit after tax is 588,000. It's provided for us here. And they said the income tax rate is 30% of the net income before tax. So here is our net income before tax, 840,000. We must multiply by 30%. Then we will get our income tax for the year. 840,000, 3, multiply by 30, divide by 100. My income tax is 252,000. 252,000. 252,000 as the income tax. So it means, therefore, your net profit after tax is this one. Let us just confirm if it amounts to that. We must say 840,000 minus 252,000. Then we are going to have 588,000 as our net profit after taxation. So this is how the November 2013 paper looked like, and this is how it was done. For learners who could not see rent properly, they will see it on the next activity, or they will see it with their educators. And then this was how the income statement should look like. I'm wishing you good luck on your income statement. Every time you write income statement, I want us to move to another paper. Another paper meaning the supplementary paper for 2014. It's for the learners who have just written the paper 2 weeks back. That is a 2014 paper. I want us to move to the 2014 paper, which was written as a supplementary. It's also February, March 2014. It's a supplementary paper. It's also question 3 of the income statement and the notes to the balance sheet. So we don't have time to go to the notes. Even for the first activity, we couldn't even have time to go to the notes. So I'm not even sure if we'll finish this income statement, but I'm going to try my level best to finish the income statement for this paper. So I want us to go back and recap a little bit. Income statement, it is done to check the financial position of the business. Income statement, it's there to determine the incomes and the expenses for the current financial year only. That is why, remember, the rent for the next year must be subtracted. So here is the requirements. They've done an extract for you. Information from the trial balance sheet section and the nominal account section. Here is your adjustment 1 up to adjustment number 11. So we'll just end where we can. We might not do it all. So here is our answer sheet. I want us to straight go into details. Let's check. Our sales, is it given? Our sales, is it given? Is it given from what we have? Remember the previous paper, it was not given, but here is given. 4,220,700. Let's see any adjustment that might be contributing to that. On the 28th December 2013, El Panye Edeta returned damaged ornaments. The selling price was 850 and the markup was 25% on the cost price. The goods were immediately sent to the supplier, who issued a credit note. No entries has been made into the books. So it means this affects our sales. So let's check. We agreed that our sales is how much? 4,220,700. There we go. Sales 4,220,700 less the 850. Why 850? Is the returns. The returns, what do they do to our sales? They reduce our sales. That's why we must subtract. If you sold 5 apples and then 2 apples are returned, you're no more going to have the money for 5 apples. You're going to have the money for only 3 apples. That is what returns do to our sales. So we must subtract the 850. Therefore, how much do we have? We have 4,220,700 minus 850,000. Then we'll be having 4,219,850. 4,219,850. That is our sales.